All right, good afternoon, everybody. Monday, October 20th, another strong Monday. I'm an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. My position disclosure here, I got out of my QBTS and RGTI shorts. Very ready to get back in them in a bounce. Things look right. I think they're not done. And so I got out of those and I started a new short in I'm just saying Uami. UAMY. Uami. Actually, I got fully out of that position during the day today. It was a pretty good trade, and then I reshorted some in the afternoon bounce and kept a little bit. So yep, that's the disclosure. All right, popping over. Let's talk about the market. So we're really strong today. I'm not surprised. The market finished up a little bit over 1% here. Actually about 1%. Looks like we're up further after hours. SPY's up about 1%. Q's up about 1.25%. IWM up about 2%. TLT was up 0.4%. That's continuing to move higher. Interest rates are continuing to grind down. Gold made a new absolute high on the daily chart here, up over 3%. It's the second time, maybe the third time actually, this month where you have gold beginning to go parabolic and then it takes a 1 day price correction just to pretty much immediately continue. So, really, really impressive move from gold. Silver, a little bit weaker than gold. Oil was down. Not a lot out there that's down, but oil was down. Dollar's up 0.25%. That has had no negative impact on the stock market thus far. But it's a pretty big overall dollar squeeze in October, and it can continue. I think I saw there's still a lot of systematic positioning that is short the dollar right now. So I keep wondering if that's going to lead to a larger short squeeze. It seemed like it did that a little bit in the beginning of the month. All right, so turning things over to the market, just do a quick recap. I don't know if anybody was listening when I was doing the podcast thing with Greta. I kind of did a recap of Friday a week ago through last week, but I think it's worth it to go through that exercise here real briefly again, right? So, Friday, October 10th, Friday a week ago, we had a big down sell day. We had been discussing over and over and over again throughout that week that the risk in this market was becoming to the downside. We were calling it like an asymmetry in risk to the downside based on positioning if it were ever to trigger, and it started to trigger in that move. We got the vol control universe began to sell a little bit, but the bigger sell triggers from like the CTA trend following community, and the spot where gamma would become increasingly less positive and eventually negative. All that is sitting at basically that Friday low, more or less. It starts really on at the low on October 10th and extends through 6,500. I don't think that's changed too much. You get a little bit different numbers depending on which bank's models you're working your way through. It seems like the Goldman Sachs trigger number for the CTAs sits a little bit higher than the Bank of America trigger number for the CTAs. But broadly speaking, Friday a week ago is the key day, spurred on by chatter from Trump on increased tariffs and trade war with China. On Monday, we gapped up massively because by Sunday night, Trump had kind of already changed his mind and pulled back on it. So Monday we had a really large gap up, but that still increases the overall realized volatility numbers. That's something to note. So even today, with a 1% up day, that actually will create some additional selling from the vol control community. But I like these inside days. I like when you get an inside day after such a large negative Maribozu candlestick like what we had here on Friday a week ago, because it just gives you a little bit of like context. The Friday range from the 10th is just so wide that it's like, okay, the important level based on Friday is the low of Friday, and the important upside level is the high of Friday. It's a huge range. But when you get that kind of inside day that tightens things up a little bit, it kind of gives you some more context that you could look at. So I spent all of last week talking about the importance of the market either getting above and holding above 665, which could then lead to a squeeze back to above 670 and all-time highs, or the market getting below and holding below 660, in which case you get like an inside down indicating some further selling, and then most likely you're going to be retesting those key levels from Friday's low. If you can break those, I think you get acceleration to the downside of the market. And we spent the entirety of last week having really wide ranges that kind of did nothing, especially if you include any pre-market trading. On Tuesday, we gapped down pretty big, but traded all the way back up and closed within Monday's range. On Wednesday, we gapped up and attempted to continue in the beginning of the day, but then we traded all the way back down and we more or less closed within Monday's range. On Thursday, we gapped up again. We traded really weak throughout that trading session and we closed near Monday's low, but still within Monday's range. Then Friday, I think Friday was particularly the really, really crazy day. VIX gapping to $28, $29 in the pre-market. The market itself, the S&P, was down to below Friday, October 10th's low in the pre-market, with the VIX squeezing higher, right? We had seen some data that above VIX 25 that you could get a very quick squeeze above that to at least probably VIX 28, and that's pretty much exactly what happened. The VIX on Thursday, with the market selling down once again, though the VIX seemed like it was stronger than the market was weak even on Thursday. We had a new high close in the VIX above 25 on Thursday, yet the market was unable. You would think, VIX, the previous VIX highs were like, I think 23 or so. Getting a new VIX high above 25, you would expect Thursday to have actually been even weaker than it was. And with that VIX close, I was kind of expecting a gap down in the market, a gap up in the VIX, and then the potential of us really going. So when I woke up at 4:10 a.m. on Friday to begin trading, and I saw that the SPYs were down below Friday's low, and the VIX was gapping up to 28 plus, I was like, "Oh, this is great. This perfectly meets my expectations." And this is exciting because if we stay down here, you're probably going to begin to trigger further systematic selling and begin that waterfall feedback cycle of lower price action. And then we started to grind up pre-market. Then Trump tweeted pre-market. The market liked it, just more pulling back on the China stuff. And by the time the market actually opened, we had retraced all the way from, I forget exactly what price, like 651 in the SPYs to back once again pretty much within Monday's range. And then we closed also within Monday's range, more or less, but at the highs of it, with the VIX crushing all the way back down. And just seeing how the VIX crushed all the way back down, still in the low 20s, not necessarily the end of the world, but I started to become concerned on Friday that we're actually beginning to set up for VIX crush now. And if the VIX crushes down, it's going to basically just create a whole bunch of forced buying to the upside in the market. And that now is exactly what played out today. Um, so at this point, to me, the market looks like continuation here to the upside. But circling back on what happened on Friday, because we don't do an afternoon meeting on Fridays, the price action last week was incredibly interesting. I remember on Friday chatting with like Rock here in the VTF, very seasoned trader, been trading since the year 2000, and he basically said, "I've never seen anything like this." The VIX gapping up this big after the continuation that it gave on Friday, and the market's like 1.5% off all-time highs. We can't actually go anywhere, and the market even closed green on Friday. And I totally agreed with him. It's like, man, like I never would have bet in a million years that you could get the VIX to squeeze to $28 and that we wouldn't have had the market really lose Friday's low and trigger all the additional waterfall of forced selling that we know is sitting below that to give us much bigger continuation, maybe to SPY 635. I think would actually be pretty reasonable if they were to ever trigger all of that selling. So what happened? How's it possible, actually, that we didn't go significantly lower with the market given what the VIX did? Well, like always, it is just in studying the flow of funds. And There were a couple of things that were out there last week that provided some degree of cushioning to the downside of the market. One of those notably is the like short time frame gamma that we're seeing come into the market. There's the Captain Iron Condor guy. There is the big option seller that Bill Kay had been talking about, who keeps coming in slightly after the open. I think on a zero DTE position that has primarily been doing pretty well with outside of Friday a week ago, the 10th when he got crushed. Lieutenant Legger, that's what we're calling him. So you're getting some short-term gamma that's coming into the market that is creating some degree of cushioning into the downside. But the biggest flow was once again, you guessed it, the retail bid. The retail bid was massive. We got I saw a stat in a research report. I think there's a Charlie McGilligan report that came out today that maybe we'll get some information into Pat's note tomorrow morning from it. But I read it a little while ago. According to Charlie McGilligan's note, last week we saw $85 billion of selling from vol control funds. That's significant. And my whole thought process all of last week, I mean, we even talked about this, as I remember, on Monday and Tuesday of last week. We said, we know that we're going to get a large degree of selling for vol control funds. The question is, can retail absorb it? And now that we got through last week, the answer to that question is unequivocally yes. A little bit of cushioning coming from Gamma, but it was all the retail bid. And actually, there was one other factor in there that helped support this market. It was the unwinding of hedges. I think that there were a lot of market participants that were hedged going into the October 10th move, and they spent a lot of last week and in those down moves unwinding them because market participants have just gotten so programmed now to buying even these small dips and quickly unwinding those hedges and selling volatility into these larger VIX spikes that you can't get the market to break. And then again, the retail bid has just been nothing short of extraordinary over the course of the last 7 weeks. 2 weeks ago was record buying. The Friday that we sold off on October 10th, I think, was record call buying option from retail, continuing to be ongoing. Um, Today, I think that there was some degree of a bid from retail, but this isn't what's pushing us up. And again, it's just how markets work. It's almost like if you point us to the downside, it actually at a certain point begins to force us up. The market went up today because the VIX got crushed, not because retail. I'm sure retail was probably buying again today, but not because retail actually pushed the SPYs back to above 670. Um, uh, it's like because retail was so strong last week, there's this constant. I've described this several times on the way up when we were analyzing all the different subsets of buyers, the systematic community, the hedge fund community, the retail community, the corporate buyback community, all of the different flow of funds communities that actually exist that compose the marketplace that in an uptrend basically pass the baton of buying from one cohort to the next. And basically what you have when you look at last week through today is last week was retail buying the dip and holding the market up and keeping us above those further systematic triggers. And then today it was here, we're going to pass the baton over to the people who are going to be buying this market because of the VIX crush. And and that's exactly what happened. And this is where we are. And by the way, the statistics look very bullish for going forward based on an analysis of what the VIX did and when you compare the VIX to the SPYs, like the degree of the down move that we had in the S&P being as small as it was compared to the VIX getting to as high as it was in similar situations in the past, what tends to happen going forward actually is relatively pretty bullish. So we'll see if that's it. And there's a good chance that it was. And when you look at the technicals here, the SPYs getting back above 670, it's not quite all-time highs yet, but they look pretty darn good. And when you look at the technicals of the Qs, they basically are all-time highs. I'm pretty sure that today for the QQQ ETF, it was an all-time high close, and we basically have fully negated October 10th. So the market looks incredibly strong. The only thing that I would say, if you are a bear and you want any possible thing to try to grasp onto, is we did have a percentage plus move in the market today. So you are actually still getting some additional selling, most likely from the vol control universe. Though if you looked at the data that Bill K posted in the VTF in the pre-market this morning, you'll actually see that they are once again buyers in a small way in a unchanged market. So while if you look at the positioning of the vol control community, I would still argue that there is asymmetric risk to the downside on any increased volatility. There's sellers into up moves, there's sellers into down moves, there are big sellers into big down moves. But that's lessening a little bit compared to where we were like a week and a half ago. And they're actually buyers again in an unchanged, relatively unchanged tape, which we know we see a lot of. I personally always struggle to be really bullish without getting a broader unwind of the systematic strategies when they get to being at the 100th percentile. And I could make an argument to myself that that was enough. You know, the selling that we had a week ago was enough. We unwound some of the vol control. They can become a buyer again, and the market technicals look beautiful, and we can continue. I'm still held back a little bit by the fact that when you look at like that CTA chart for the trend followers, it's the tiniest of downticks. They sold nothing. So what I really wanted from this market to actually get bullish, I didn't get. What I really wanted from this market to actually get significantly more bullish was to see a larger unwind from the systematic community as a whole. And that would have required us to actually get below the October 10th low, give us the bigger sell off, unwind even more from vol control, but also unwind from the CTA trend following community, wash that positioning out a little bit, give us a bigger dip to SPY 630, 635, and then at that point, obviously taking it on a case by case basis. And I'm just making up a story here now because this is obviously what didn't happen. At that point is where I could feel a lot more comfortable being bullish because then you know that the systematic positioning, that unemotional systematic positioning is back on your side. Here, the technicals look really bullish. The vol control did unwind a little bit, but I feel like it wasn't enough. And the other thing that I wonder still is, do we hit a point where retail runs a little bit dry on powder in terms of their buying? We saw that note last week from Morgan Stanley, and I mention it again, but I look at it with a huge grain of salt and a huge asterisk, that the retail community, what they've seen is that they tend to buy in waves. And on average, and we understand how averages work, on average, those waves last for 6 weeks. And last week was week 7. So I can't help but wonder here when I haven't rolled off the entirety of the systematic community in terms of positioning unwind, and maybe retail actually begins to slow down at some point, that this market could stay a little bit more choppy, or even, God forbid, give us a moderately deeper pullback. So I am keeping that in the back of my head, though at the same time, again, you look at the statistics, and maybe it'll be in Pat's note tomorrow. You look at the statistics of what happens after a VIX move like we just had that then crushes down, and especially when you get a VIX move like we just had that isn't coinciding with an actual market move lower. Those historical statistics are very bullish, and these technicals are very bullish. So, and the bottom line is we don't want to fight the technicals. So we'll see how all that plays out. This is all obviously as we're getting into earnings season, and as we get into the beginning of November, it also becomes significantly more difficult to be bearish because we'll get some renewed bull flows to come in, particularly from the corporate buyback bid. And interestingly enough, historically, November is a very bullish month from retail, uh, which will be interesting to see what retail is able to continue to do, because retail is typically not a huge buyer in like the September October period, but they have been this September October. Does that mean that November is different from them compared to usual, or does that just mean that we're just getting warmed up, and you can go have a look at the chart that Bill posted in the VTF of 1999 versus the current market insofar as the AI trade to make yourself just take out a second mortgage on your house and buy every stock you possibly can on leverage. I say that joking, obviously. So that's where we're at on the index level. As far as individual stocks go, again, I've kind of switched a bit of my short focus to some of these meme type stocks. Really started doing that last week. I actually got all out of RGTI today, below 43. I will re-engage that trade is kind of my plan on a bounce, but I got to see what it looks like. I got all out of my QBTS short, which was also from last week, from Thursday last week. Was a really good trade into the 21 EMA. I also don't think that this thing's done selling, but followed my game plan, got out of the position. I'll reassess that as it goes. I got the new one I got in was this UAMY, this UAMI. It was great in the beginning of the day. I'm surprised about the degree of the recovery it had in the afternoon. We discussed this in the morning meeting. They're buying out some sort of company in Australia, potentially, by the way, potentially, and it's an all stock deal. And one trade that has been very, very, very consistent for us in the last handful of months is usually the company that is doing the acquiring trades down and the company that's being acquired trades up. But in this insane market that we've been in recently with all these crazy meme stocks, we're regularly seeing them gap up meme names if they announce that they're buying another company. But then after the market opens, then they crush the stock, usually from big green to big red. And this is probably the sixth instance, maybe, of that trade that we've had over the course of the last 3 months or so, and they have all been big pairs. This was a great short. I started shorting at pre-market. It did go all the way green to red. The difference between this one, I think, and some of the other ones, though, the other five or so, is that this actually ended up rallying all the way back, which is pretty darn impressive. But you can't ever count out these meme type stocks. This one only has like a $2 billion valuation on $28 million of revenue. So, if it catches up to some of the other ones, I mean, it's probably worth like 20 billion. So just be careful. But yeah, then I kind of sort of reshorting small, and then I added into this more parabolic move on the 5 minute, took some off in the close. It's kind of it for me from closing out positions and new positions. Tried the SPY short that one time via SPXL off of this call out right here. We saw the grind up, a lot of extension on the 15-minute chart for that time of day, and then we actually accelerated up on the 5 minute. So we called out the short for here, got a little bit of a pullback on it, made a couple dollars, got out of the way, and then new highs obviously came back into the market. And I think that pretty much kind of covers it on my end, insofar as a review of the market, what we can kind of be looking for going forward, and a little bit of my day. So I'm happy to turn it over to you guys for anything that you may be looking at. Yeah, so KRE, I know had a big bounce back day today. I don't know why I can't type. There it is. But all that is a bounce back from extension to the downside, almost into the ADMA on the daily. I would still rather be short this than long it. And same deal with XLF. XLF is a little bit sloppy because I think that mostly the earnings reports were really good for the big banks, but it was overshadowed a little bit by the banking crisis chatter that was ongoing last week. So this is still XLF a potential short versus 53, but I'd rather be short KRE. And if for some reason you want it to be long a bank, like Wells Fargo looks great, and give a great green day today too. That one got mentioned in the morning meeting today. Um, Gold selling a little bit after the close. Yeah, GLD selling down a little bit after the close. We'll keep an eye on that. I think that this gold is very close to topping out now. With that said, I kind of thought Friday was it, and obviously we got new highs today. But I think it's very close. I still stand by. I would rather be short the miners. Look at the relative weakness on GDX today compared to GLD. I also like XME as a short. This one bounced back pretty decently. I don't have positions in any of those, but I like them more than shorting the metal outright personally. Amazon was strong despite that outage today. Why not? Back into the 80 man on the daily. I mean, just, continuing to rotate. All right, cool. I'm not seeing anything new in the VTF. Let me pop over to the YouTube channel. Bobby Kimball says, buy everything. IR Joel says, what market environment do you personally trade best in? Low vol bull market, bear market, etc. I know you try to always adapt, but I was wondering what you typically perform best in. What I typically perform best in is like a medium volatility environment. I don't like when the VIX is trading at 13. I don't like when the market is just in a very, very, very steady upside grind. Pretty much all of September and October until October 10th, it felt like we were up every day, but never more than 0.5%. That's not my favorite environment. I also don't like the degree of volatility that we had in April. I remember whining about it a little bit back in April, even though it made for some tremendous opportunities to make some really good money. I like kind of like a moderate middle ground when it comes to volatility. Honestly, more like what we saw last week, intraday. I know overall on the daily picture, we ended up not doing anything all of last week, but the intraday moves were very, very big and very, very wide, and that's like an ideal amount of kind of general movement to me. And even better if it could have been combined with some degree of trend. But if you're asking me for my best trading environment, I would say it's like a middle ground of volatility. I like correlations to be a little bit higher. I don't like the massive amounts of dispersion that we've seen, but I don't need April of 2025 either. From policing pips, let's say the AWS outage that affected Robinhood and Webull made retail actually trapped in long. Could this have shown the hands of the larger participants? Yeah, I mean, I think that to some degree we saw that today's buying was not from Robinhood. I think it was from larger participants as a result of the VIX actually crunching lower. But so I'm not 100% sure I follow the question. But if they got tapped and the market was down, then at a certain point they're either buying more of the dip or they're maybe someday maybe having to puke out stock. But we still have not seen that happen from retail at all. Um, so it is. Give me a second here. Sorry, just give me a second, guys. What else? Sorry. Just let me manage this position really quickly. Love when you get squeezed a little bit on a position right after the market closes. It's always fun. I'm assuming there's no news on that. I'm assuming it's just the normal retail after hours craziness that we sometimes get. All right. Well, looks like I got through all the questions and comments anyway, as I'm looking at it. So I'll wrap it up there. So relatively short afternoon meeting. Strong day. and we'll see if we get continuation tomorrow. It's looking somewhat probable to me. Have a great night, everybody. I'll see you then.